Hello, Adrian Karczewicz, Skanska Commercial Development Europe. I'm responsible for divestments in Central Europe. Very interesting indeed. I would say we had a quite variety of people in the room, from investors through developers, tenants, brokers, and from geographical presence as well. Very diversified pool of people. So very exciting. Of course, most common word was what is the big elephant in the room. Of course, we try to identify a few. Definitely one of them is the interest rate going up due to the inflation. And that was interesting to see what is the dynamic between countries like Germany versus Poland, what are the lending costs in Germany and in Poland, what are the yields, where the value is basically, because everyone is of course after value. But of course, we were looking at this more from development angle. So we try to identify some opportunities and threats. Definitely, the opportunities connected a little bit with the situation right now, where the developments are being a bit limited. There's less competition on the market, so this is giving some of us developers an opportunity to place a product and to have tenants. The great situation is actually in Warsaw, where it's quite undersupplied versus previous years. So from all of the markets that we see in Central Europe, Warsaw is, I would say, potential overperformer over the next years in terms of the potential growth of rents for office space. So when you look at the yield, cost of financing, and the perspective of growing rents, we believe that Warsaw is on a very good path. And again, I'm talking about offices because we as Skanska develop office buildings, but there are of course good examples of profitable projects on the logistics side, PRS, not so much retail. So this is a bit more difficult. The banks are willing to finance developments as well. Of course, the pre-lease is the key. So therefore, office and logistic is definitely a way to go. Yeah, so what I touched this a little bit, a few seconds ago. So the inflation is of course causing the construction prices going through the roof. We see quite a big change comparing our investments before, let's call it COVID breakout, and right now. So we have somewhere around 30-40% increase of cost, which is having a dramatic impact on the profitability of investments. So we are very much looking into projects where we are seeing potential growth of rents, which I have mentioned. So definitely CBD Warsaw is our key. However, we are expanding, trying to secure land in other major cities of Poland, or Budapest, Bucharest, Prague. So still we are trying as a company which is not so much dependent on financing. Because we are self-financed. We try to take advantage, buy land, and still be ahead of the competition, even though the inflation is there and the construction costs are, of course, being one of the major factors that we have to take into account going further into our investments. One dynamic here is that we see interest from tenants, which are willing to buy buildings. So this is also what we have just discussed with colleagues in the room. That tenants in all of the cities, including Czech Republic, Romania, Bulgaria, are interested to buy buildings. One of the examples which was mentioned in our discussion was Google buying an office building in Warsaw, which was more than 600 million euro in the overall transaction volume. So that's quite interesting signal that the tenants are trying to take advantage also of the situation, and instead of leasing, they're looking to buy property. So for developers, it's very interesting to see. Definitely. We have ESG in our veins. We basically started this, in our reporting some 20 years ago. So of course it was not ESG, but all of the different factors which are connected with environment, social and governance. So therefore, we very much have focused on that, and we use this experience from the past years. And right now, what we see, this is actually very much strengthened by the way how the capital markets work, because you have to look into green bonds to finance your developments. You have to look into financing which is very much constrained when it comes to ESG. So it's quite difficult to get proper prime financing terms when it comes to your developments if you don't have ESG compliant projects. So this is, as I said, bonds, financing of banks, and then of course tenants. Yes, tenants are right now pushing very much this high on the agenda. They are not accepting any compromises here. So this is giving us a fuel to provide a proper space in all of these three aspects of ESG. By saying that, we see that in the future it will be also now again coming back to our discussion. So the fund managers will have to look very much into, okay, should we keep these assets which are a bit problematic, not ESG compliant? What should we do with that? So we see also some kind of an angle where maybe we as developers can cooperate with big fund managers who have this, let's say, red light assets that they have to be simply repositioned, changed functions, or sometimes even simply demolished and to use the land for something new. So this is where developers also see a bit of a space to cooperate with a big investor fund.